The daily edition of Market Wrap with Mo Ansari.
Brought to you by Compact Asset Management.
Providing proactive portfolio management and world-class wealth management solutions.
Hello, everyone, and welcome to Market Wrap. I'm Mo Ansari, president of Compact Asset Management, and you're tuned in as you've been doing so for 2 decades now. And as always, you can call in, and I will be more than happy to share with you my 33 years of trading experience. Today on our guest line is Mr. Richard Spitzer. He is publisher and founder of TrendPointers. Mr. Spitzer is a veteran over 35 years in the marketing and business research industry, in which he managed thousands of research projects commissioned by major companies nationwide. He founded TrendPointers to help investors learn about the drivers of future investment and market behavior. Mr. Spitzer, welcome back to Market Wrap.
Thank you for having me today, Mo.
Richard, it's nice you were here about a year and a half ago, so it's nice to have you back. Things have changed a little bit over the last year and a half, but have they? Are we sort of going back to where we were in 08, rolling over into a recession, or this is just a little bit of a, as a lot of people are calling it, a soft patch in the economy?
No, we think this is a bumpy ride down for the foreseeable future. When we talked about a year and a half ago, you said something to the effect that today's news is old news, and the news we're collecting today indicates that, because of the elections, there might be some upward movement, but we're seeing two things. One is we believe we are in the double dip now, and that we'll have a possibly very poor first quarter as we see some of these self-fulfilling expectations play their way out.
Let's talk a little bit about each one of these permanent changes, or what some people call as a paradigm shift that we're seeing. Is it because of the demographics that the baby boomers are getting older? They're realizing they've lost half of their money in their equity in their homes, which was going to be their little nest egg to retire on. Their 401k has been cut in half because they're holding hopers, where they're holding and hoping. They haven't made any adjustments in their portfolio. What is it that's causing people to make the changes, or is this a culmination?
Well, it's a culmination, but it's happened in a very concentrated period. And you touched on two of the big things. One is, various estimates for underemployment and unemployment are anywhere from 16 to 20%. What that really has resulted in is a long-term contraction in consumer buying capacity. If you're unemployed or underemployed, you're not coming back to the markets, to the Walmarts and the Targets as quickly as possible. And, back in 08, when retail sales went down, like 8 or 9% in that 6-month period, only 8 or 9% led to discussions about we are in another depression. So the U.S. is accustomed to operating at such a high level of capacity that, single-digit declines have an enormous leverage effect on demand. So, number one, a lot of capacity is out of the market for probably 5 years, we think. The other, as you mentioned, is the home equity piggy bank is gone for, depends on which estimate you believe, 3 years, people say 20 years. I don't know, but it's clearly gone. Homes underwater. You add these two things together, and we look at maybe 10 to 15% of the retail buying capacity has been taken out of the market, and we don't know when it's coming back.
Let's talk a little bit about that. Is it that the present administration is more of an administration, if you're not well off, it's going to help you. But if you are well off, they're going to charge you or tax you or make you pay more on everything? Is that what we are seeing, is basically the rich are being taxed more and more, and people who don't have, it's a reallocation of wealth?
Well, that's part of it. Without getting into a specific political discussion, we think there's several things going on. One is there's the policy part of it. We're in a certain situation. What efforts will it take monetarily and from a stimulus standpoint to prime the pump here to get things going? But from a purely political standpoint, there's a power struggle going on. I'm not saying who's right or wrong and who's going to win, but we have two probably most divisive outlooks on economic policy right now, where both groups are striving for power.
What about the middle? That's where the country is most of the time. The fringes make all the noise, as we know. But the people in the middle, that's mid-America. That's what middle-class America is all about. They're getting sort of squeezed on both ends.
Absolutely, and we look around, we go to the mall, and we go to one mall in one suburb, and you never know there's a recession or post-recession, and you go to some other cities, and, it's pretty bleak. So, unfortunately, the middle is not evenly distributed. Depends upon, seems, where you're living, and, the fact is, 88% of the people are working, but yes, we think they are cutting back. But from a political standpoint, some other measures we have says basically people don't know what's going on, who's telling the truth, what's the right thing to do, and there's virtually no confidence in any political message coming out. And of course, impatience is just dominating, because when you're fearful, you become even more impatient.
What are the solutions? We can talk about all this stuff, how bad things are and how bad things are getting, and what can we do to fix this? Is it a political fix that we need? Is it an economic fix that we need? But we need to do something. What should we do to fix it?
Well, it's a profound question. If you take some of the pieces we've just discussed, I would say, number one, it's a state of mind fix, where what kind of life do we want and what's necessary?
We have these people with the high tech and the intellectual. Those people are well off. They're going to continue to do well off because they're the Steve Jobs of the world. They're the innovators. But unfortunately, not most of the people are Steve Jobs. They're not the innovators. And then there's the bottom half of the economy, or the bottom 10%, that has the subsidies, and the government will continue to help them with the safety nets. But it's the middle 80% is, again, that we're concerned about, that's where the jobs were, where we were getting those manufacturing jobs and all of that. That's what made up America. And all of a sudden that we've come to the realization it has been hollowed out and all the jobs are gone and they're not going to come back anytime soon. Does that mean that we are going to see a permanent decline in the standard of living for the middle class?
Yes, and partly because the people at the top extreme, this gets borders on the political discussion, but you remember Peter Drucker, the great management guru?
Right.
Before he died, he wrote an essay, and he said, I may be paraphrasing, he said, "The downfall of America will be rampant corporate greed," end quote. And we're seeing some of that being played out now because it's been permissible. So as we talk with people, certainly in the CEO level, one thing I take away from this is if people, whether at the corporate level or just the wealthy or moderately wealthy, believe that they can insulate themselves from the well-being of everybody else.
It's the corporate greed. Is it that, corporations think that they can lobby Congress, get the money, and get away with it like the bankers did, where they got into trouble and the taxpayers or the Congress bailed them out, which the taxpayers ended up footing the bill in the tune of $800 billion. We call it a stimulus program, but that's really what it was. It was a stimulus for the banks. So it is that kind of stuff where corporations can get away with it, but the individuals are stuck with the bill. And more people are feeling that way and starting to really feel depressed about that.
Yeah, if you look at history, will there be somebody in 2012 or 2016 that will emerge as the new true populist leader that'll say, let's pitch in and get this done, because then it won't be the Tea Party per se, but it'll be a broader movement of, let's get this country back on the road and don't sit on the sidelines. Everybody's got to do what they have to do, or it's not going to work out well for any one of us.
Mr. Spitzer, let's go and talk a little bit about the markets. We've talked about the economy. We've talked about all of this politics. Let's talk about this market. That's what a lot of the people who are tuned in right now are talking about. Where should people be going right now? There's all the people, the hold and hopers, the buy and hold people, they're still holding and hoping to break even. What should people be doing? What is your newsletter telling them right now to do?
Well, most of our clients are commercial, institutional, but if you're a long-term investor, that's fine. The standard advice is good, but for the next 2 to 3 years, we've gone mostly cash. We're trading volatility, things that are most affected by fear, highly publicized. There's the old phrase, the market hates uncertainty.
Mm-hmm. So you're looking at rallies as selling opportunities, pullbacks as to cover those shorts, and then wait for the bounces to go short again.
Right.
Are there any
there's something we're calling value volatility, too, which is there's certain sectors, like financial services, maybe healthcare, maybe some tech that may be beaten down right now, that if you watch it closely, because they're beaten down and because they're volatile, can offer opportunities, but we don't see any opportunity to make any long-term investments now for at least the next 2 years.
So you have to have that trading capability to take advantage of the market. That's the way the money is going to be made. Otherwise, just like people for the last 10 years, they've been sitting there and they haven't gone anywhere. Put it this
way.
Mr. Spitzer, again, I want to thank you for taking the time out of your busy schedule and being with us today.
Always a pleasure to talk with you, Mo.
Thank you so much. And I would like to offer all of the listeners Mr. Spitzer's latest newsletter. It's called 10 Pointers Precast Signals, a new leading indicator for contemporary business and investment planning.